Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, September 25th, the year 2018. Let's talk trading. Luck. Yesterday, the topic was possibilities. Today, we're going to talk about luck. I received an email from James Clear, and he was talking about success and luck and hard work and things like that. And I sent it out to, I don't know, about half a dozen or so of my friends, some of which I've known since the fifth grade. So, and some of them I've only met within the past year or so. But it's been a very interesting discussion how each person has their own views on hard work, to be successful versus luck to be successful. I find it kind of interesting because James Clear also referenced the some of the books from Taleb, The Black Swan, Fooled by Randomness, Anti-Fragile, that whole series. And the thing is, hard work leads to success and luck leads to success. There are so many things you do that it looks like because you did them, you were successful. But on the other hand, there could be one or more things that you're not aware of, that are outside your control, that all played a part in your success. For example, a job interview. You've gone to school, you've got the grades, you put on your best suit or business attire, and you show up for your interview. You go in, you have a great interview, and within a few days you get the phone call or letter offering you the job. So now you think because all your hard work paid off, and to some degree it did, but what if there was another candidate who worked maybe just a little bit harder and grades were just a little bit better? Maybe they couldn't make the interview. Maybe they were the first pick, but because of some quirk they had in negotiating the salary or whatever, the offer was withdrawn and given to you. Maybe they just blew the interview. Bad luck for them. So you see, you just never know if it was how much luck played in your success. I mean, in the market, there's so many times when you can get lucky or unlucky. I mean, I remember one time I traded this stock, never traded it before. I was in a chat room listening, and this guy called it out, and I jumped in. And within about 5 minutes, there was a stock halt. At the time, I never even knew such a thing as a stock halt. Needless to say, when the market for that particular stock opened up, I was down about $5,000 and it never recovered. Not that day. So that was just bad luck. I mean, it was a bad choice for me following somebody else's lead. And I think after that mistake, I think I repeated that mistake maybe 2 times, following somebody else's lead. Because usually when I follow somebody else's lead, it rarely is paid off. So, I assume full responsibility for putting myself in that position where bad luck could happen. But you see, that was just that trade. And I can point the finger at somebody else and saying it was my fault for taking it. But it could have been in the stock that I trade every day, or just like now. Something could happen. I could be in euro yen, and for whatever reason, they come out with a statement, and the next thing I know, it's gone, it's put me in the hole. It's going the opposite way rather than put me in profit. But you see, that's why you use money in risk management. So in the case of a stock halt, it would have blown through my stop. But then, sometimes you just get those black swan events. But just on the day-to-day normal trading, in and out, your money and risk management protects your portfolio. Okay, euro yen, only 20 pips off of that high, which is 133.12. And for the week, you can see, once again, it's right there. Today's Tuesday, so we have the rest of the day, and then we've got Wednesday, Thursday, and Friday for it. See if it breaks through previous week's high. And we still have 2 pairs, 3 pairs, and they all have the Aussie in them that haven't filled the gap. And looking here yesterday, we see we broke through yesterday's high by about 1 pip, turned right back around. And we're still in the wick zone of the previous daily session. The range, only 74 compared to 23 at $10 yen. So it should be obvious by now the reason I switched. Okay, we've only got 2 over 100. So kind of a slow day. And you can see here in euro yen, there was a trigger, profit trigger, should be scratched. There was a trigger. Your profit should have been taken right about there. Then you basically could have jumped back in, price went up, and once again, profit could have been taken right about there. So once again, using those previous wick zones or candles highs to determine where you get out of a trade. And see right there at the time, that was a holo. And you can see if you picked up that holo trade, let's see. Yeah, it would have been to here, 45 pips. And you can see here we've got the rat zone. There was a little trade here worth about 10, 12 pips. You can see we're back in the zone. You can look for it to come back down. Trigger last time to get on the boat, 132.90. Waiting for a tick so the charts refresh. You can see that weekly pivot here. We're way above it. Oh, I guess it's not going to, it has refreshed. You can see the pivot area here. We took that pivot area out. Once again, here we took it out. Only 2 missed pivots, right? See, that one was missed that day, but it got taken out the very next day. So you pivot traders, heading for those pivots, once again, profit to be made. Price action. The thing about this price action is many people don't understand the 3-level ZZ indicator. They think it signals a reversal, when in fact what it does is it signals a breakout. So when the ball first appears, it's going to get pushed up or pushed down. So you see here when it pushed down, now we know. So what you want to do is, now you're going to trade candle color. You'll trade the reversal as candle color. So here, green at the line. Here, red at the line. And then right here, you've got green at the line. Now, when you see this long tail, you may have dropped down to, say, M5 or M15. Let's just take a look here. Oh, that's right. I've got the buttons indicator. So let's take a look at M5 as the ticks load up. Here we go. So you see here we have some 3 balls. So when you saw that big drop, maybe you switch down to a lower time frame and see if you can sneak some trades in. But you see you get a lot of 1 balls when you come down this far. So maybe you go, okay, let's try M15, which was the dragon's favorite. So you see here that long push up. Now you've got the 3 ball. You pick up a M15 here, or you jump in the trade right here off of the 3 ball in the same candle, or you can wait. But right here, when it either cut through there, failed to make it, turned around, you could play this highest open here of the M15, went up, came back through. That's how you can play that in real time. So you see here it's putting in a 1 ball, but remember you're on an M15, so there's chances that you're going to get a lot of these 1 balls, and it can happen the other way real quick, because a 1 ball takes 5 candles or 5 bars into account. So we'll put that back to H1. Previous lines, or the lines for the previous daily session here. And once again, you can see we're in the upper wick zone. And you know what to do with the lines. You trade with candle color. Wick zone. Here we go. You can see popped out, came back in, but it's a big wick zone. So we'll have to wait and see. Popped out there, popped out there. It might wind up in the wick zone, because it happens sometimes. Here's Holo, once again showing that nice trade there. And it's coming back. The inventory reduction bars. Presently, you see we've had a long trigger here, a long trigger there. Just hit a short trigger. Looks like that was a scratch. And previous daily, weekly, monthly open high-low lines. Once again, you can see here there was a short coming back between open and low right there. That was a looks like that was a wick zone, and we are out of it. Or was that a wick zone? I don't think that was a wick zone. Where's wick zone? Okay, there's the wick zone. Yeah, see, I don't think that was in the wick zone. That was the upper wick zone. There's the low down there. Yeah. See, that was yesterday. This is today. Do I need to expand the chart? No, we don't have to really worry about it. And as you can see right now, things are pretty flat, just going across the chart. And right here, since I opened the chart, 90, there was about a 4-pip profit to be had. But that's pretty much it, fellow traders. Just remember, luck plays a part in your success. So it's not what you trade, though. It's how you trade it. So let's continue a week of draining the banks.